Welcome back to the UP Homebuyers Summit. This is a free live virtual conference for UP home buyers and sellers featuring 5 top speakers with a whole range of expertise on UP real estate and sharing their best tips and strategies on getting you your best deal on your next home purchase or sale in the UP. And I want to just really give a warm welcome today to Anthony Zorza. Excuse me, I think this is got the wrong graphic up here. I think we are going to take a look at this one here. Whatever you want. So we'll just keep that up for the time being. So Tony is having a hard time with the video aspect, but he is here on the phone here and is going to be sharing about getting your how to save on the closing costs and finance your home repairs with Freddie Mac matchup program and construction loan. Anthony is a senior mortgage loan officer at Embers Credit Union, and I just welcome Anthony. I'm so thrilled to have you here.
Yeah, thank you, Anna. I'm glad to be part of this, and
there we go.
I've listened to some of your other presentations, and it's lots of very good info. So what I've been seeing a lot lately is first-time home buyers coming through, even with the influx of home purchases and such. And sometimes the biggest barrier to that new home ownership is having enough money saved for that down payment. So we partnered up with Freddie Mac. They're on the secondary market for mortgages. We still service the loans and such, but we're one of the few financial institutions that use this program. It's called a match-up program. Freddie Mac partners up with us. It's a 6-month process for new home buyers. There is some qualifications that you must meet. It's 80% of the county area median income. So if we're looking at Marquette County, we're looking at $51,120 a year is the income limit on this. What's nice about this program is it doesn't include all the people that live in the house. I've worked with some MSHDA loans and rural development loans, and some of those type of loans, you have to include the income on anybody over 18 living in the household. So with this, you can just use one income if we needed to, but they still need to be able to be approved for the loan, of course. So with this match-up program, we work with Green Path, and they set up a savings account where they contribute to a savings account for a minimum of 6 months, and then there's different tiers. So if they contribute $500 to $750, Freddie Mac will match them up to $1,000 on that. So what's nice about this matchup, it's not dollar for dollar. So if you hit the tier, you get the level on that. So the $500 to $750, you hit $1,000. That'll go towards your down payment and closing costs and such. So the next tier on that is $750 to $1,000. On that one, you're going to hit the $1,500 tier. And then the tier above that one is $1,000 to $1,250, and that's $2,000. And on the final tier, the max level, if you contribute $1,250 or more than that, Freddie Mac will match you $2,500 on that. So that's great on that type of program for people that are just starting to save for their first home purchase. And what's nice about that also is you only have to put 3% down on this type of program. So with that 3%, you can use what you have contributed to the savings accounts, and then the Freddie Mac savings match up on that. So there is some eligibility things that go towards this. You have to hit the 80% qualifying gross income, which I had stated before is $51,120. There's a home buyer counseling program that's done through Green Path. It's just it's a course that you take. You can do it online. It's super simple on that. It gives you good pointers on your first home purchase and things to look for and such. And then you have to make a savings contribution for 6 months at least on this type of program. What's nice about it, you don't lose your money if you decide you don't want to go through with a home purchase anymore. You'd get your money back on it. Or if something happened where maybe you want to look at a different loan program, you would get your money back on that. You would just miss out on the Freddie Mac matchup on that. So at the end of your 6 months, we would see what you have saved up and what tier you're at. And then we would take a look at what you got and then what the Freddie Mac matchup comes to. So if you hit that top tier, that $2,500 can make a big difference on your first down payment towards your house. So on that, there's other programs too. We have the Freddie Mac One Loan, where you only have to have 3% down. So that helps with any kind of lower down payment. This one, you don't have to have income limits. The only thing with this, you won't get the Freddie Mac matchup on this one. So this is just the 3% down. You have to have private mortgage insurance because it's below 20% on the loan, LTV, loan to value on the house. But that is also a nice program that we have been doing at Embers Credit Union too. So some other programs that I've been noticing is with the house prices being higher than usual, is we've got a great construction loan program. We've partnered up with some of the large contractors in the area. So we have a low fees compared to some of the construction processes that I've seen. We've got a very competitive rates going on our construction loan right now. And it's pretty smooth process on that. So that's another nice item on there. With that, you can bring the property value to part of your 20% down. We do require 20% down on the construction loan, but if you have the property and it's been paid off, we can use that towards your down payment, the equity on the land. We've got a very flexible draw process on that. We've worked with the few large builders in the area, so we've worked together pretty smoothly on all areas on that. So some other items that we have too is what's nice at the credit union. If you don't qualify for the Freddie Mac loans that we have, we do have in-house products which we can kind of tailor to what the buyer might need. You know, we have flexible terms, lower credit scores that might qualify, depending on what kind of issues they might have on their credit report. And yeah, with all those items, we're a great place to come and check out for any type of home mortgage that you're looking for. First-time home buyers, any kind of refinances, any kind of construction processes that you're looking at. also with the in-house products, we can look at different type of properties that might not qualify at some types of banks and stuff that use Freddie Mac or Fannie Mae secondary market loans. We're able to finance off-grid type of housing. We've got good terms for that type of stuff. Any type of vacant land, we've got vacant land type of loans. So you could purchase your vacant land with us and then go with a construction loan and build your house on that type of stuff. So that's what we kind of have at the credit union, Anna. So.
Oh, perfect. Yeah. So you mentioned like 3% down for some of these. Is that right? Did I hear correctly?
Yeah.
Wow.
Yeah. So with the Freddie Mac Home Possible and Freddie Mac Home One loan, we can get you in with 3% down.
Wow. And
So
how much have you been doing recently? I mean, is this a pretty steady thing that people are looking at?
Yeah. So I've been seeing a lot of new members. That's another thing people don't realize with the credit union, that we do offer all these type of products that any larger bank might have. You do have to become a member, which you can just open a savings account. You have to. We tailor to anybody in Michigan. We've done some stuff in northern Wisconsin and stuff. But as long as you are a member with us, we're able to service you with any type of these loans. So with the Freddie Mac Home Possible, that 3% down is a great thing. And then you have the match up program with that type of loan. You just have to qualify with the income, and the house has to kind of qualify too, which you can go onto their website to see if the house qualifies. And most of the houses do qualify in the UP area. So
what are
I
they
haven't
or
yet.
what qualifies a home, or what might disqualify it?
So it kind of where it kind of might sit in an income type of level within the area. So I've yet to see a house that has not qualified for the Freddie Mac or Freddie Mac One home loan for the first time home buyers. So
Okay, are they
yeah.
looking for particular, is that like a rural development similar kind of thing? Are they looking for location, or is it
Yeah, so it is kind of a rural development type of loan, but it's not as hard to qualify the house like a rural development loan. You have to get a different type of appraisal on it and such. So these two products does qualify you for a conventional appraisal, which doesn't cost as much as maybe an FHA or rural development type of loan on that part, or appraisal, excuse me.
okay. So for anybody who's just joining us, what are some of, and this, which particular loan is this? This is the Home First, you said?
Yeah, the Freddie Mac Home Possible is the
Oh,
one that has the match up program, where if you contribute to so much to a savings account, they'll match you up to a certain amount in each tier. So
okay, so this would be a great thing if you know that you're going to be looking for a home. They can go in and talk to you, set this thing up, and then just be socking away money into that savings account while you're in that process of searching, correct?
yeah, correct. And then if you have the buyer that already has the money saved up, we've got the Freddie Mac Home One loan, which doesn't have the match up, but it allows you to do the 3% down,
Okay.
the lower down payment.
Okay.
But with that, don't have the income limit. So that's a nice piece to that type of loan there.
Okay, and so the Home Possible, you have to qualify by, what was it, about 51,000 or so? And is this a household income for the year?
Yeah, it's for whoever is on the loan. So if it's a husband and wife,
Mhm.
their income combined has to be less than $51,120. So
Under,
what I've seen is, yeah, under that to get that match-up program.
okay.
So what I've seen is if I've had a husband and wife or a boyfriend and girlfriend or whatever, a couple coming in and they're over that, but one of them can qualify for the loan amount they're looking for on a house, we'll just put their one income on there so that they can qualify for that home
Oh,
possible to get them.
so you can do that. And so would that person be the only one on the title to start with?
Nope. So what's nice is they don't have to be on the loan, but you can put them on the title at the end. So,
Okay.
yeah. So if you're worried about that part, anybody can be added to the title and not be on the loan. So.
Got it. So, but the loan would fall to that one person. So you better make sure you're really married, right?
Right.
Yeah.
Yeah. Make sure you got a good connection there.
Yeah, for sure. Awesome. But that sounds like a really great opportunity. Now you said that it was about six. Is there a time frame that do you have to be using it within 6 months or a particular window of time?
Yeah. So with the match-up program, you have to save for a minimum of 6 months.
Okay.
So if somebody's looking to buy within the next month, this might not be a good program for them for the match-up.
Mhm.
But somebody that's looking in the future, they're just starting to save for their first home, this is a great program. A lot of kids coming out of college or whatever, they're looking for their first home. It's just nice how much they match towards your down payment. So with this, there's not a limit on how long you can save. So you can save for a year or 2 years on this program. So there's not a limit on the end. It's just they have to save at least for 6 months.
Okay, that's amazing. That is a really incredible opportunity, especially for young people starting out. To be just even if they aren't really in the market yet, but know they will be in a couple years.
Right.
To
Yep.
to start thinking about that. That's great. And what happens if you start on this, you get approved, and you've been saving for a couple years, and suddenly you get a promotion, and you're no longer eligible? Does that just sort of just kind of fizzles out, or is there something that you would?
Yeah. So you would get your money back. We could get you into the Freddie Mac Home One, which doesn't have the match up for the down payment, but it'll get you at the 3% down payment.
Okay, great. Because
What the
that
price? Yeah.
amazing. That's a really
Yeah.
great.
We could. Yeah. So we would be able to switch them into that type of program, and then they wouldn't lose out on the money they had saved in the savings account that's opened with the Green Path that
Sure.
they keep track of.
Okay.
Yeah.
So is there a financial kind of cutoffs either on the low end or the high end for that? It was the home. Which one was
The
it?
Home One.
Home one, yes.
Nope, there is no income limits on the Home One loan.
So anybody, no matter what their income level, could look at that one.
Yep, exactly.
Nice. Okay.
Yep. And a lot of places, from what I've looked around in the competition and stuff, they require like 5% down. So this is a nice program to only have to put 3% down on your first home purchase.
Absolutely. And those couple of percentages, when you're looking at a purchase as large as a home, just even a few percentages can make a big difference in the amount that you have to actually plunk down and maybe cover some of that. There's always closing costs that a lot of, especially first time home buyers, don't even think about until the time comes. It's like, holy,
Yeah, exactly. And that's another way with these programs. If you work with a realtor and such, you can ask for 3% concessions back so that the seller will pay for your closing costs. So then basically you might not have any money out of pocket on your first home purchase with us. So.
wow. Okay. That's a great negotiation technique. I don't know how well that would fly this year, but you never know. And could be.
Yeah, I've had a couple actually just recently like, I didn't think it would work for the area that we're at.
Yeah.
But we had a couple members that did ask for that 3%, and it was granted in their offer. So as long as the house comes in appraised, they might have offered a higher amount for that seller to accept that, but
Right.
but we were able to get a couple deals done like that in the last month or so, which I was surprised myself, actually, with the way the market is. So
Right, but maybe if the rest of the offer was really attractive, right? Why not?
yep, exactly.
Yeah, and that there's just a way to kind of recut the numbers in your favor. Sounds like very cool. So, what about the home construction loan you're talking about? And is this something that even if you're not buying, if you just decide that, oh, the market's too crazy right now, I want to just kind of improve the home I'm in? You tell us a little bit more about that.
With our construction loan, it's actually it's a brand new build type of loan. We currently don't have a renovation type of loan yet. We have that coming down the pipe soon. With the construction loan though, like, yeah, if the market's kind of high, with the wood prices and stuff, the construction prices are up a little bit, but I've talked to some of the larger builders that we have in the area, and they've been able to save in certain areas so that they can keep that construction loan process lower than, it's still higher than usual, but it's not been spiked like the wood is, like the 2x4s have tripled in price and such right now.
Yeah.
So some of the larger builders, they've figured out how to save in different areas so that your new home that you're looking to build, they're able to do it without having an extreme price on it. So so with that construction loan, what we do, it's a 12-month process. It can be extended, of course, if there's items that might cause a delay with materials not being able to be found, or weather types, because we are in the UP, so it might start snowing tomorrow or rain for a week and they can't get work done. So that end 12 months is flexible. And at the end of that 12 months, what we would do is we would take a look at it, and then we would refinance it into a conventional loan for you, so that we lock you into a lower rate and a fixed term for that. So I did see that question come from Rich. So.
Oh, okay. That sounds like a great option here. So when you say you converted after 12 months, can you explain that a little bit?
Yeah. So at the end of the 12 months, when construction has been completed, we'll get it appraised, see what the house comes in at value, and then the draw amount that you had used, we would refinance that into a lower interest, fixed interest rate at a fixed term. So you can look at a 10-year, 15-year, 20-year, or 30-year, and we'll get you into a conventional type of product at the end on that.
Got it.
And yeah, and then if you use us at the credit union, we'll give you your half of the origination fees back from the construction loan. So that's kind of a nice thing.
Oh, nice. Yeah. So the question, just so that people on Facebook are aware, that Rich had asked was, do you refinance the land and the home loan together when the home construction is completed? And I think that's what you were addressing, correct?
Yep, that's correct. So we would take the two items and then have it appraised, and then we would take that value and then refinance your draw that you had used to complete that construction loan.
Right.
into one
Oh,
fixed loan for you.
oh, okay. So just simplifying things. That's great. Oh, comment from Mickey. The home one loan has a 3% down payment. For example, a $150,000 mortgage would have 4,500 down payment. She says if the closing costs were asked for, that would take care of that if that was granted. Wow, she's saying. I was thinking that asking for a closing cost wouldn't even be a possibility. It almost sounds too good to be true. So you've made a fan, I think.
Yeah, no,
This-
that's awesome programs that we've got, that we partnered up with Freddie Mac on those two items.
Yeah, this is something that I wasn't aware of. I've never even heard of this. And how long have these been available?
I started with the credit union in December, and I know I had worked for a bank previously from the credit union, and we didn't offer these programs. Our lowest was 5% down. So this is something great that Embers has brought to the community to help with any type of home purchases, first-time home buyers. And to qualify as that first-time home buyer, you don't have to be a first-time home buyer. You just can't have owned a house within 3 years. So you would re-qualify for that if you had owned a house before, because people are like, oh, I already had bought my first house. Well, as long as you haven't had a loan within 3 years on real estate, then you would qualify for this first-time home buyer programs.
Oh, nice. Okay, so these are all considered first-time homebuyer programs, correct?
Yep, exactly.
Okay, okay, but it doesn't necessarily mean that you've never owned a home in your life before. That's
Yep.
really, really good to know. Great. So are you seeing a lot of interest in this, or is this something that you're needing to go out and educate? Because like I said, I hadn't heard of them.
Yeah, well, that's one thing we've been trying to get out and educate some of the people in the area. When I first started with the credit union, I started pushing it a lot because it's almost an easier program than like the MISHDA loan or the rural development, because you don't have to qualify the house. They're not as picky, and it's a quicker process with the whole mortgage and such. You know, we can get these done usually in 30 to 45 days. So
Wow.
Yeah, we've expanded our underwriting team, so we're pretty caught up on the refi boom. So we can get it done pretty much as quick as the appraisal comes in.
Right. Wow. Okay. So what about a person that is a homeowner and is looking for financing? They're just looking to downsize, upsize, whatever it is that they're doing. Um, do you have any programs out there for them that would be, where would you steer somebody like that?
Yeah, absolutely. That's probably our biggest thing right now is people are moving into more expensive houses because of what the interest rates are at right now. Their first mortgage in the home that they're at, they might be at 4 or 5%, and now they can get their interest rate from 2 to 3%. So yeah, they're thinking they can afford a bigger home, or I've got people too that also are looking to downsize, usually on the older end of our clientele. Their spouse might have passed away and they're moving into a smaller type of house so that it's easier to upkeep and such. So yeah, we do offer the regular Freddie Mac type of loans on that, where we only require 5% down. We'd like to see 20% down so that you don't have to pay the mortgage insurance. That's one big thing.
Okay.
And then
So
we have a lot of
20% you're not paying mortgage insurance.
Yeah, if you put 20% down, you won't have to pay the mortgage insurance. With the Freddie Mac home possible, the one with the matchup, you qualify for a lower rate on the mortgage insurance. I forgot to talk about that too. So that's a nice feature of that loan also.
So what is,
So yeah, go ahead, Anna.
oh, because I don't think I've ever purchased a home where I had to pay mortgage insurance. What does that run? How does that work?
Yeah, so it goes on the percentage of what the loan amount is. Usually it's 35% of the loan payment. So you're probably looking at it could range from $50 all the way up to $200 depending on the loan amount a month. So
Okay. So that,
yeah, so that was another thing I forgot to talk about on the Freddie Mac Home Possible and Home One is once you have your loan paid down to 80% loan to value, you don't have to pay mortgage insurance on those, and then you don't have to refinance it to get out of that. So that's a nice item on those two type of loans.
oh, great. Because this for other loans, would that be just sort of for the life of the loan then to have that insurance on there?
Yep. A lot of the other type loans, the way to get out of it, you would have to refinance it into a different type of loan, most likely, to get out of that
Got it.
mortgage insurance.
Yeah. All right. Yeah. So that is definitely something to consider, and that makes me realize why the 20% is a pretty standard thing.
Yeah, that's what it's standard on the home purchases.
Right. Yeah. But if it can get you, into a home, so you're a homeowner rather than renting, even having some of that insurance, depending on where you're at, may actually help you to save money, depending on, because I know, depending on the home, you can actually save a lot over what you would be paying renting.
Yeah, absolutely.
So yeah, awesome. Okay, does anybody here have questions for Anthony? This is just a fascinating topic. And I'm just gonna throw it out there to Facebook and anybody here on the call. If anything that you'd want to delve into a little bit further on this topic.
Yeah, I know I've gone over a lot of information and we kind of talked about a few different items. So I do have some flyers and stuff. I can email them out to you, Anna, if you want to spread those out to the community and such. If people, it'll explain the program a little better.
Yeah, do you have maybe a link to, do you have anything online that people could just search on, or if you had a link to something?
I don't have that yet. That's coming up soon. They just have flyers at the moment. So when I get that link, I can share that to you. Absolutely.
Okay, that would be great. We'll definitely share that. And in the meantime, I'm assuming that people could email you and you could email them directly, correct?
Yep.
Okay.
Definitely.
Yeah. So where can they reach you while we wait and see if there's any more questions rolling in? Where's the best place that people can reach you if they want to talk to you for more information?
So they can call, my cell phone is area code 231-239-1602. That's probably my best able way to get a hold of me. And then my email is tzorza@embers.org.
tzorza@embers.org, and it is 231-239-1602, correct? Yeah,
that's correct. It looks like Rich had a question about acreage limits on these loans. They usually want to see 5 acres or less, but I've seen larger, especially in the UP area, because a lot of homes do have larger acreage with them. So they've been pretty flexible with the acreage limits with these type of loans. So.
Oh, so how flexible is flexible?
Yeah, I just did one that had 40 acres. Yep. So that's pretty standard from what I've seen. Is a lot of the homes are between 20 and 40 acres in some areas. So I know it's possible to be done for sure. If we can't get it done with one of those type of loans, we'll look on the house side and kind of tailor that product and try to mimic it. So we have many different possibilities to get the deal done for somebody. So that's what's next.
Great. We have some extra time if you want to go into some of those possibilities, especially for somebody looking for rural property, looking for acreage. I know we've got a couple here who I know personally are interested in that. Would love to hear a little bit more about that, purchasing and financing land.
Yeah, so we've got vacant land program. Usually you have to put 25% down on the vacant land. We have a 5-year fixed or a 10-year fixed, or we can put them into it's like a 5-year balloon loan, which we can extend the payments out for 30 years. So then you have a lower payment. It's just within the rate's locked for the 5 years, and then we'll have to do something with it within 5 years though. That's the only thing with the balloon loan. Yeah, so the rate can vary a little bit on the vacant land. Standard, we're right around about 5.95% on the vacant land, but depending on the different type of lands and such, we do have some different special rates that we can hand out on that. Also seen us lock vacant land into a 15-year term, so we've got some different programs that we can work on the in-house side, definitely to try to make it the best for the member and such.
Right. Are you aware of specific programs for farm property?
For farm property?
Mm-hmm.
Yep, so farm property would be on our commercial side. I'm not sure if they've done any deals on the farmland. That's a good question. I'll do some research on that. One thing I do want to say is we do, on the commercial side, we do rentals and stuff. So that's a good thing to let everybody know about. I've worked at a few different financial institutions, and not many do business loans or commercial loans on investment properties. So that's something that we have a pretty good program for that on the commercial side.
Oh, that is really good to know. Was it I think it was Stephanie who was talking about, especially if you're starting out, purchasing a duplex and using it as a step up kind of property. Or was that, I can't remember who that was. But that is good to know, that there are programs out there that you can work with that, because I know typically you're going to have to be putting a little bit more down for commercial.
Yep. Yeah. Usually they require 20% down, I think. I would probably want to look at the property on my side first, because I can usually get a better rate and get them into a fixed term. We can go up to four units on the mortgage side. So anything larger than that, then we'll have to definitely refer it over to commercial side. But I know that they're only, a lot of the deals they've been doing is putting only 20% down. So
really, okay, that's really good to know as well.
Yeah.
I know there's a lot of that, the rental properties, especially in Marquette and the West End, and it can be a great way to get into a home if you're just starting out, or even if you're looking just for investment, some way to invest your money. Yeah. So now rural development loans, is that something that you do a lot of?
that we don't have that program in our book yet. But it's something that we'll probably have in the future. So that's another great program.
Yeah.
That can cover 0% down, on a house. So.
Right. Okay. Cool.
With
I love
with
it.
that, the qualifying the house is a little harder, but I've done it at other places I've worked at.
Mhm.
It's not a huge problem usually.
Right. So now, if somebody is going in and purchasing a home under one of these Freddie Mac programs, what's kind of, can you walk us through what that actually looks like? Once you found a place and made an offer, is there anything special that you had to think about, or what would be the sequence?
Yep. So we would get them pre-approved, of course, first. Just like the realtors had talked about, they're not even showing people without a pre-approval letter. So that's your first step, is you definitely want to get that pre-approval letter, see what you can qualify for. So once they're qualified, I'll kind of look at the different type of programs we have that will save them the most amount of money, or get them the lowest rate and such. So once we get them kind of where we want to be, if they qualify for the Freddie Mac Home One Possible with the matchup, then we get them in contact with Green Path, who is our partner on that. It's kind of like a three-way thing between us, Green Path, and Freddie Mac.
Okay.
And they'll talk with the counselor, get their counseling down, and then they'll open a savings account with Green Path that tracks their savings amount, so they can see what tier they'll qualify for. So once they get that all started, then they've got their pre-approval letter. They can do their shopping.
Mm-hmm.
Once they find a house, we'll see what they're kind of looking at, if it matches up with what they qualified for and such. And then we would look for a purchase agreement.
Okay.
Once we get to that point. So once we got the purchase agreement, I would notify our Green Path counseling people and see what amount savings they have, what tier they're at. And then we would go from there, kind of see what the down payment amount they have available. We'll see what their closing costs. We'll get a loan estimate out for them that breaks down the closing costs, their down payment, their rate, and their payment amount and such. And from there, we usually will order appraisal. Once the appraisal comes in, we'll order title work too, which usually the realtor will help with that. They'll usually order title work as soon as they get a purchase agreement on their side. And then once the appraisal comes in, we kind of finalize the deal. Between the purchase agreement and the appraisal, we'll gather all the income information from our borrower and such, which they usually bring in when they get pre-approved. So really at the end is we're just waiting for the appraisal, make sure the home value comes in at the right amount, and then we'll get the deal closed.
Right. And you were saying that recently it hasn't been all that long strung out of a process, correct? It's like you said, 35, 40 days.
Yeah, when I first started in December, we were locking rates at over 60 days. Now we're locking them at 45 days. So we're usually getting it done before that. So
That's pretty good.
yeah, yep.
Yeah, great.
Quick. Yeah.
Well, this is.
I feel like
Oh, go ahead.
Yeah. I feel like the appraisers are actually getting quicker turnarounds too. So that's good.
Yeah, maybe the market's just so hot they have to streamline things or something, right?
Yeah, must figured out a system because they've been getting them back quicker than before.
Okay.
So.
Yeah, that's good to know. All right. Well, thank you. This has been just incredible information, just a wealth of information, whether you are just starting out or if you, are looking to build or looking to buy land. Just fascinating. If you would like to have, if you're watching this and if you would like to have just links to the replay, We are offering that. It's like you'd have to sign up for the event, but you can always message us at Live the UP or message our sponsor at UP Home Inspection, ask for those replay links, because I think this is information that would not hurt to have around and be able to share around to your people. So
Yeah.
yeah, so thank you again, and I know that you are planning to join us at the top of the hour here on the home buyers question and answer panel, and we're really looking forward to having you there. Stephanie Jones will be there. Rich Beasley with Home Inspection will be there. And we are just going to take whatever questions people have about buying or selling property in the UP, about financing the property, any real estate questions you've got, bring to the table. We've got a panel of experts here who can answer them. And if not, they can at least direct you where to go to ask. And I know I've got a few questions lined up that were, that people have asked and emailed for somebody who was not present. So we'll be sure to start off with those. We'll be taking other questions. If there aren't enough questions, we're just going to jam on topics of interest and negotiation tactics, other things that I think that people will find valuable. So definitely join us for that. And it will be at 3 o'clock here on Live the UP on the Facebook page here. And thank you again, Tony, and we'll catch you soon.
All right. Thank you.
You're welcome.